So welcome back, and thank you all for being with us all day today. It's been a really interesting day. I'm going to recognize them later, but just have to say, our NHC staff who put together all of the content throughout the day, what an amazing job. And yes. And really exciting for me. This panel is going to be awesome. I'm really looking forward to hearing three of my favorite people, Pam Patnode, Megan Cheney, and Dana Wade. It's like everything I could ever need to learn about what's happening in Washington. I could just have dinner with these guys and be pretty good to talk about, sound important all week. So thank you very much for being here.
Good afternoon, everybody. It's really bright up here. We need sunglasses, so I can't see anybody from this side of the room over, although I can see Megan. She's right there. As David said, I'm Pam Patnode. I'm the former Deputy Secretary of the Department of Housing and Urban Development. I spent a few years working on Capitol Hill, but for a senator a very, very long time ago, so I'm not qualified to be up here with two of the smartest women on Capitol Hill. Dana Wade is my former colleague at HUD. She was the FHA commissioner, and she was also the associate deputy of the Office of Management and Budget. She's worked on both the Senate Banking and House Budget Committee. She's a graduate of Georgetown University and has an MBA from the Wharton School at UPenn. And Megan, my new friend, who's a good friend of my daughter, Megan, is a professional staff member working for Chairman Sherrod Brown. She's been on the Hill for a really long time, and I would say that it's common knowledge that these two women know a whole lot more than I do about what's happening on Capitol Hill, so I'm looking forward to learning too. Daniel Horning was supposed to be here with us. Thankfully, his boss was already here today, so we already heard probably a lot of what Daniel would talk about, but I may touch on that with you. I don't know if either of you had a chance to watch her. It was broadcast this morning, but we'll touch on that briefly. So we're going to talk about the legislative landscape. You know, I think this is the first time in my 40-year career that housing, people are talking about it at the dinner table. People are talking about it all the time. I mean, this is an affordable housing crisis of epic proportion. And there are dozens and dozens of pieces of legislation. We've heard about some of them throughout the day today. But Dana, can you talk about what's happening? You know, big news. Yes. I was very saddened to hear that your chairman, Patrick McHenry, who really knows housing, is going to retire at the end of this Congress. So
yes.
Can you talk about his priorities? And I'm sure nothing's going to change because the man loves housing.
Yes.
And I'm sure he will remain focused. But if you can talk about his goals.
Well, thank you so much for the question. And honestly, thank you very much for having me today. You know, it was sad news, I think, for all of us. I remember I worked on the House Budget Committee, as you mentioned, and Mr. McHenry was just a young congressman. He's about my age. So
he was the youngest member of Congress.
He was the youngest member of Congress. He was 29 years old, and you know he was kind of a firebrand. So it was really for me to be able to come back to Capitol Hill and work on the House Financial Services Committee for Chairman McHenry, who, by the way, he said to us, he is retiring, he is leaving Congress next year, but he said, we have a year left. This is a year to get things done. And in our world, you know, the world that Megan and I work in, a year is a long time. So please don't count us out. We do want to work together, and there are a lot of things that he wants to accomplish. He said he's not going to sit back and twiddle his thumbs. We just had a hearing on housing affordability. It is a big issue. It is an issue that we cannot ignore both from the homeowner side and the renter side. And we believe now we have 4 or 5 bills that we have attached to hearings. We want to have another housing hearing early next year, hopefully with the HUD secretary. But the good thing about the House of Representatives is that, and I don't know if the Senate does this too, I can't remember, whenever you have a hearing, you attach the related legislation. So it's a very transparent process. So if you ever want to know what is going on in the House Financial Services Committee, go to our website, look at our hearings, and you can see the bills attached. There were a handful that deal with affordability, 2 in particular that deal with a topic of mine that's one of my favorites, which is manufactured housing, and making that more available as a way to supply affordable housing. Right now, it's about 10% of the housing in the country. We're also looking at ways to bring down the cost of homeownership, rentership, and this is hopefully something that we'll really get at next year. So anyway, looking forward to working together.
And Megan, I didn't properly introduce you. Megan's a graduate of Duke, and you've worked on the Hill. We've worked for the senator on the committee since 2015?
The committee since 2015, worked for the senator since 2011. Yep,
So you've been with them for a very long time.
for a bit.
So you can talk to us about what's happening on the Senate side. What are the chairman's goals, and what does he hope to accomplish in this Congress?
Yeah, absolutely. And first, thank you so much for having me, and to Pam for hosting this conversation. And I will just say as a preface that, that my views that I'll be stating are my own and shouldn't be reflected on the members of the committee.
Which I should have said too, by the way. Thank you for reminding me.
Sure. Our chief counsel reminded me. Always good to have this. Housing is a real area of passion for Senator Brown. I think, if you have heard him speak, you've probably heard him say that he is now referring to it as the Banking and Housing Committee, not the Banking Committee, and that he, since he became the chairman, we've had a large number of hearings on housing. We've started out both of the last 2 Congresses with hearings on just what is the state of housing in our country. And I think, unfortunately, there is, as Dana said, there is just an enormous shortage of affordable and available and safe housing for both homeowners and renters. And as Pam said at the beginning, this is really an issue that has bubbled up, even in the short time that I've been working on this issue, to become a top issue in a way that it wasn't when I started. Unfortunately, it's also been an issue that has been an issue for a long time. The issues around housing affordability long predated the start of the pandemic. NLHC has been publishing its out of reach and the gap reports for many years longer than that. So we really just have this incredible shortage of housing and a real gap in the housing that's available and affordable, particularly for people who make maybe an hourly wage, people who work full time, who have careers but just cannot afford a place to live. And so that has been a real focus for Senator Brown. And I'll also just say he came to the Senate right at the beginning of the financial crisis. I was sitting on the Banking and Housing Committee at the time. Many folks have also probably heard him say that at one point during the financial crisis, his zip code had the most foreclosures of anywhere in the country. So he saw, not just from his seat on the Banking and Housing Committee, but from his neighbors in Cleveland, just what a devastation that was. And if you go around Cleveland, you still see some of the signs of the financial crisis. So it is still very much with us and part of our discussion as we think about housing and what we need to do to invest in our communities. So the senator, through all of these hearings, we've been very focused on the large number of different issues that are facing different types of communities when it comes to housing, right? So everything from disinvested communities that really need rehab and repair of their existing housing stock and new builds, as well as those communities that we've seen just kind of spring up in the last few years, and now there's literally nowhere for anyone to live. We've also, as I mentioned, renters who just are not getting a paycheck to support even a basic rent. The incredible challenges facing communities of color in terms of rental and home ownership opportunities. And I heard Christopher Tyson mention earlier the appraisal gap that we also continue to see, as well as more and more communities that are facing the challenges of climate change and seeing an increasing number of natural disasters. So it's just a few of the challenges, and we are certainly focused on all of those pieces, but I think there are many different solutions that need to be brought to bear to really get to all of those different unique but very real challenges that different parts of our country are facing. So it's a huge focus of the chairman and something that we hope to be focusing on more over the next year and to continue to focus on.
That is very good to hear. It's funny, we were doing staff work, which is the most fun work in the world, I think, to be a congressional staffer. It's my favorite job of all time. I feel very lucky to be able to do it again. But we were just kind of looking up, and I know this was a problem when we were at HUD, and I was at FHA. Obviously, homeowners, renters, borrowers were stretching more than they had, which basically means they were spending more of their paycheck on housing, and it was continuing to grow. That percentage was continuing to grow. So I looked it up this week to see, okay, what is the average, I don't know if anyone can guess, what is the average multiple of someone's salary that they will pay for a home? It used to be 3 times. Now it's approaching 6. So I mean, it is, for homeowners, it's a huge issue. For renters, I think the big stat for me that I find very appalling is 50% of renters are paying more than 50% of their paycheck on rent. I mean, that's just a crazy statistic. That is, it is only getting worse, and I think what we saw with, there was already a backlog of supply. There were already affordability pressures, but COVID made that worse. The supply chain issues of COVID, the labor issues made it worse. Cost issues, there were a lot of cost issues when it came to building new homes, and now you have rate issues. Of course, the most acute shock to the system, I think, when it comes to housing during the last year has been rate increases. And I worked, before I went back to the Hill, I worked in commercial real estate for 2 years. And as Pam knows, it is darn near impossible to finance new construction right now. Be it affordable, if you have a tax credit deal, which oftentimes relies on other equity anyway, or if you have just kind of a workforce housing deal. I mean, some of the luxury stuff was getting done, but it is very, very hard to build. It's obviously hard to refinance. It's hard to transact. So this is a very challenging environment.
Is Lori Goodman still here? We all know she absolutely is the smartest person in housing. And Lori was talking about the 203K program. Mm-hmm. And Dana used to have to do a lot of tutorials for me when I was the deputy, going over and over these programs. But she talked about how for the homeowners that need to do repairs, that the financing's not available, the system's broken.
Yeah.
Can we talk a little bit about that? I learned a lot from that last session. I know you weren't here for it. So she was talking about the 203K program that I know the current FHA commissioner, Julia, mentioned this at the Mortgage Roundtable a couple weeks ago in New York, that they're trying to make some changes to it, but that it sounded like Lori was saying we need a complete revamping. So can we talk a little bit about that? Because the statistic that you just threw out, the 6 times on housing, that's
it's
alarming.
approaching 6. I was like, this can't be right. If you look at the median income and the median home price.
That's really scary. But people are living, older homes, they need repairs, and if there's no way to finance these repairs, people are stretched.
That's right. I do think that, and I have to be honest, I haven't looked at the 203K program in a while, and I don't know if that's something that requires Congress to intervene. So my current role, I probably need to sit down and talk to Lori. But because when I was at FHA, we didn't have a very high volume of 203K. I mean, it wasn't really a usable, workable program.
It doesn't sound like it is.
We did use it after disasters, though. I think there were things we did to make it more flexible.
When you briefed me was after the hurricane season of 2017,
Right.
and I really didn't know what 203K was other than it was on the shelf.
Yes, and I mean, I think I would look at that disaster-related toolkit and kind of figure out, now we know, we have that example of, unfortunately, those 3 huge hurricanes that hit. Mm-hmm. So we have a good sample size and a data set to figure out what happened there that worked with that program. And I'd like to go back and kind of look at that data myself.
And does it need congressional action?
I think there's a little bit of both. So I think just last week, FHA announced, Commissioner Gordon announced some updates to the 203K program and what they can do through their own authority. So they did roll out, maybe on the drafting table, but they did roll out some new 203K provisions through what they can do through their own authority. For the last couple of years, they've also included some small legislative fixes in their legislative provisions, along with the budget that they submitted. And some of those updates, they're small things, but I think they just, they make it easier for lenders to know what the point in time of the appraisal is that you need to use to be able to figure out, okay, what are we basing this loan on, right? Small things that I think would make the program a lot more workable. And I think there are a number of things kind of across the FHA programs, also in the Title I program, right, as well as the FHA multifamily program that are small legislative things that could make the programs a lot more workable. And at a hearing that we had back in April on legislative proposals around housing, a member of our committee had a proposal, had some of the Title I proposals, and there was also, as well, a member of our committee who had some of the multifamily proposals. And I know one other issue related to 203K has also been this, can you also do an accessory dwelling unit with the 203K as well, right? Which is another part of this conversation about how do we expand the supply. And so that's another piece of this with respect to 203K that I think takes a small legislative fix, but would open up that ADU market a little bit more.
That would, and we did have conversations on that. That would be like a supplemental loan to the standard, bread and butter FHA loan. The question there, though, and I actually really support ADUs, and I want to look into ways to try to, grease the skids a little bit there. But the issue is kind of what is the combined value? What is the combined appraised value of a home plus an ADU? Is this something that works well with FHA in the first place? And I don't know. I think it's something we should look into, though.
Yeah, I think ADUs are very promising, and we are seeing this in California. 30 years ago, I served on the planning board in my hometown in Bedford, New Hampshire. Absolutely had never heard of an ADU, but we got an ordinance passed 30 years ago, and pretty amazing. There were a lot of problems with it, but 30 years later,
Right.
it is now a really popular topic.
Yes.
And would create a lot more units. When Ally was
very
talking
true.
about her parents looking for, smaller units. Well, smaller units don't exist, but for ADUs. So.
Absolutely. And the other thing about, and you kind of alluded to this, Megan, ADUs are great because, especially if you're someone who's a senior and you want to age in place and you live in an area where the cost of land is high and it's unaffordable, a lot of times these are precisely the areas that younger generations want to move to. So it's actually a very good kind of affordability match where you're making a unit affordable for, someone from the younger generation plus someone who wants to stay in their home and lives in an expensive area but is kind of looking for ways to monetize their house.
So I know the two of you get along really well, and I was really heartened to see the wonderful remarks that Ranking Woman Waters had to say about Chairman McHenry. That was really heartwarming to see that. And real, I know her and I know him.
Yeah.
So it was very genuine. But is there room for bipartisanship on the Hill? And particularly as we enter 2024, an election year?
Well, it's harder. I should answer the question and say there's always room for bipartisanship. And anything is harder during an election year, anything. And right now, it's a tough environment because there's so much information. It's so easy to get on social media and tweet something and make news. You can do that. It's a lot less work than introducing a bill and having to work with your colleagues on it. So a lot has changed, but I will say this about the 1 year left that Chairman McHenry has. It's like sometimes when you have nothing to lose, that's when you do the most work. I mean, I feel like a lot of these jobs I've had, the last couple months are the months that I've actually really got something done. So I'm very hopeful.
Yeah. No, and I would say the same. I have to hope that there's lots of room for bipartisanship, and I really do think there is, and I think we've seen some of that actually demonstrated on our committee. When I mentioned the hearing that we had in April, some of those bills that we talked about as part of that hearing were actually bipartisan proposals, things like the Choice and Affordable Housing Act, right, that provides some additional, will help bring additional landlords into the Section 8 voucher program. We have also had a pretty phenomenal collaboration amongst Senators Smith, Rounds, and Lummis on our committee, doing a lot of work around just improvements to the rural housing program at USDA and the Rural Housing Service. That's been a great bipartisan, it's got 10 bipartisan co-sponsors, and just make some updates to programs that have been, kicking around since the 40s, right? So I really do think that there is room for bipartisanship, and I also think, through some of these hearings, Dana mentioned the hearings on the House side and on the Senate side as well, and even outside of our committee, housing has just popped up everywhere. I mean, Judiciary had a hearing. We had a Judiciary hearing related to some housing issues. We had, and it comes up in the Finance Committee all the time as well. And throughout all of that, we've heard from both sides of the aisle concerns about outdated zoning barriers, things like, parking minimums and, 1 acre lot requirements, things like that, that I think on both sides of the aisle, people have concerns about, and I think local communities have concerns about. And so if we can help communities who want to make changes do that, I think that's something that we've seen both sides have a real sense of support for, and that we've heard support for. So things like that, I think, are, and things like bringing more landlords into the Section 8 program. We have this program, we put out the vouchers, we want it to work. We want people to be able to get into homes, to lease up, to have safe, stable housing. So I really do think that there are some opportunities that are already out there, and conversations that continue to try and find paths forward on things that could start to chip away at this just phenomenal challenge that we have.
And we did attach the Yes in My Backyard, the YIMBY bill, to our last hearing, which is bipartisan. So there's definitely room. And I would say, too, everyone, we're so used to, I started working on the Hill in the middle of the financial crisis, and everyone wanted this comprehensive housing finance reform solution. I think we're pretty far away from that comprehensive reform, I have to be honest. But I think reform is going to happen in smaller chunks and smaller pieces that add up to be something very meaningful. So don't dismiss those smaller bills. Maybe we can get together and kind of get a handful of them and get them going and hopefully get them enacted into law.
How closely do you work with Ways and Means and Senate Finance? Because these are committees of jurisdiction that are really important, and not
Definitely.
everything of the legislation that's pending is in your committee. So how well do you work with them?
Yeah. I'll say my boss also sits on the Senate Finance Committee, so that helps a little bit. And
Do they get along well?
Yeah.
The chairman and the
they do.
senator? Good.
Yeah. So Chairman Wyden and Senator Brown get along well and do a lot of work together. And I think, it's been helpful also for the senator to be able to have kind of a voice on some of those really important tax issues that, as you alluded to, are, so much of the way that we help to finance new development now and to, to really build our housing supply, our housing stock, and just the policies that do have an impact on our housing market. And so, through that seat, Senator Brown's been a strong supporter and co-sponsor of the Affordable Housing Credit Improvement Act, as well as the Neighborhood Homes Investment, and original co-sponsor of the Neighborhood Homes Investment Act. So I know those are two kind of marquee pieces, but those are some that he's really been supportive of, and we certainly hope that those can be part of the broader housing solution as well, because they really have brought a lot of, the Affordable Housing Credit Improvement Act, LIHTC, and the program has brought a lot of housing supply to the country.
Yeah.
Are you optimistic about either of the bills passing?
Without being a member of, I will knock it out over my skis, and I'm not a committee staffer on the finance committee, but I'm certainly remain hopeful. I know they have broad bipartisan support in the Senate, and I hope that those can advance. And I know that people who are much more in the weeds on tax than I am are probably at this moment talking about if there's a way to advance more a broader package of tax issues. I know that CTC and R&D have also been part of that conversation, as well as all the other tax stuff that I don't pay as much attention to. So
I am going to get out over my skis and be an armchair
All
tax
right.
economist. I'm literally sitting in an armchair. I will say this. I read the same articles that everyone. First of all, yes, we do work with them, and I think Ways and Means and Finance, I don't know if it's like this on the Banking Committee, but they have so many different issues they work on that housing is really not their bailiwick. So they do rely on the experts on the authorizing committees to kind of consult with them on these issues. Getting over my skis, though, I will say this, that, and I think people in this room know, because the nature of the appropriation cycle, now we have an appropriations year that basically ends on February 2nd. So all of the CR expires on February 2nd. Typically, tax packages happen at the end of the year, the tax extenders. Expiring provisions come together, and those are sometimes grouped with appropriations bills, usually. That's not going to happen this year. So I don't think anything's going to happen this calendar year. And I think in particular, just the nature of extenders, and it's an unfortunate thing for housing and the housing industry, is that it really very quickly goes from one bill to two to someone else's priorities to, I'm going to make this about the child tax credit, which is why I think some of those LIHTC provisions didn't pass last year, to I'm going to make it about some other extender. Even some of the baseline, tax extenders are expiring, which are huge priorities for the business community, research and development, depreciation, and a lot of others. And again, I am no tax expert, but I think it is the hardest thing is that you know, we have to be kind of wary. We have gone through a period of pretty rapid inflation. You have to be wary of huge fiscal stimulus bills. So I think the more folks can work to get kind of smaller bills that are offset versus looking at these huge packages where everyone gets something, I think the likelihood of that type of package is pretty low. That's just my opinion.
So speaking of stimulus bills, there was a lot of legislation that was passed during COVID, and some programs that I have had to work, I worked very closely with and have seen some wonderful results, very expensive, some of these programs. But do you want to just comment on some of the COVID-related housing programs, and if you had a do-over, you know,
Right.
would you have done things differently? And I know you weren't there.
Well, no, and I was for a lot of it, and I mean, certainly.
You were
It was.
not in your current role, though.
Oh, no, exactly.
Right, right.
Yeah, thank you,
Just to
yeah.
be clear.
I was there, I was administratively.
Right.
Yeah, you were on the other side of that.
on the other
You were on
side,
the
right,
receiving end.
Yes. So, you know, well, I think let's talk about the things that I think were actually good, which I think, unfortunately, you know, we've had a lot of crises. We had a huge hurricane season. We had a 100-year global pandemic, but all of those did give us a new toolkit when it comes to things like looking at ways to keep borrowers in their homes that are financially responsible, that are good for the FHA borrower, that are good, you know, for the FHA fund, including streamlining partial payment of claims and things like that. We learned a lot of lessons through COVID and just how to keep people in their homes. You didn't, you know, that was an absolute emergency, and that was a top priority. There were things that didn't work out so well, and certainly there were some things that had a shorter lifespan and probably should have. You know, you cannot have eviction moratoria forever. I think everyone knows that. And in fact, you know, the CDC moratoria was struck down. But like a lot of the tools that FHA developed that are still being used, I think are success stories.
Yeah, absolutely. I mean, I think there was a lot of white knuckling, especially at the beginning, as we started this process. I will say, and a lot of, you know, especially, you know, in those first few weeks, as we were all just trying to figure out what on earth we were dealing with, both from a health perspective and then from a housing market perspective. You know, a lot of bipartisan work that went on to get the CARES Act out, right? And I do think that ultimately having you know, a streamlined forbearance program that was standardized across the mortgage industry, and that ultimately a lot of mortgage lenders also chose to just extend to their entire portfolio. I think for simplicity and fairness and all kinds of other things, I think it ultimately helped a lot of borrowers, even borrowers who maybe they didn't actually need to skip any payments, but it gave them that peace of mind of knowing I have a home and I'm not going to be kicked out of my home and lose my biggest asset during a 100-year pandemic when I don't know what the threat is. And so that was just, I think it was incredible, and I also think it, you know, the tool of forbearance, I think, is also something that we're now seeing more and more conversations about that being something that can really be utilized, you know, not just in a, you know, if you have a giant hurricane for 3 months, but also in situations where a borrower really just does need a little breathing room to be able to save their home, especially at a time when we have these affordability challenges. And if somebody loses what they got now, the next thing's not going to be more affordable. So I think the forbearance was a huge benefit. And also I think, you know, I'll talk a little bit about the rescue plan. I really feel like, you know, the emergency rental assistance program and the homeowner assistance funds that we were able to put out, I have just, you know, heard from so many folks about, you know, what a real benefit that is. And I know so many, you know, so many folks who were saved from eviction because they had that financial assistance, and I worked more directly on the housing counseling and homeowner assistance fund pieces of that, but that was something that, you know, really was intended to, and I think in a lot of ways has helped a lot of borrowers just be able to start fresh, right, and say, okay, I can make my payments going forward, but this can clear the decks. And I think, you know, also in some cases where there weren't great loss mitigation solutions, there weren't things like what FHA was able to roll out in terms of a partial claim, right? Not every program has that. And so for those borrowers who didn't have that kind of option, I think homeowner assistance funds in a lot of cases did help to kind of bridge that gap. And so we've just been excited about what those possibilities mean on a go forward basis, and just showing what it can mean when you give somebody just a little financial kind of a shim to put in there just to get them through those couple months that were tough, right? So I think that those lessons about stability, and as Dana said, really some of the programmatic changes at FHA and the GSEs that I think we'll see going forward will help with housing stability generally.
Great. Do you mind if we open it up to the audience? We got to keep this group going
Please,
here.
Great, if I can
please.
see
Whoa,
anyone.
I see hands going up already.
Oh, yeah.
All right, so who has the mic? Okay. All right.
We went there early.
So while we're waiting for them to get the mic ready for the audience, can we talk about homelessness for a little bit?
Yes.
Just talk to me about what's happening on the committee discussions about homelessness.
Yeah. Well, first of all, when you brought up the topic, I thought of you. I will never forget sitting down with you after you did the point in time count, and it was just so touching when you and Secretary Patnab went out on the streets, talked to homeless people, did the homeless count, and it was, it is an incredible tragedy to look at the human side of it, and I don't think it's something we can ever forget, and I know that you experienced that firsthand, so thank you for all the work that you did. Homelessness is a big issue, I don't have to say that, in American cities, and it is very tied to a lot of things, crime, drug use, obviously. I think even if you look at city centers, and there's no better example than Washington, D.C., right out, in front of this building, people not returning to work, or at least losing the momentum of return to work. It's a real problem because you're seeing the economic vitality of cities go down a lot. I think the federal government needs to come back to work. At least as much as I do, which I can tell you, I'm a working mom and I appreciate that flexibility. I think it's very important. But I think it is time to come back to work because it is killing Washington, D.C. And I think problems like homelessness are only getting more and more out of control. There are a lot of...
Do you see a nexus between the two?
Absolutely, between lack of return to work
And
absolutely, I
homelessness? Okay.
absolutely do. Because I think it creates an environment where it really is kind of an urban, a decline of our urban centers. And obviously what drives homelessness is the lack of affordable housing. That anyone knows that. It's the lack of supply. It's other problems that are tied to a bad economy, such as, inability to deal with mental health or substance abuse. And we certainly do not have enough resources to do that. And I think any discussion on homelessness has to incorporate both of those, because you can't just say we are going to deal with this, we are going to get people off the street. I think this whole housing first discussion of is it merit worthy, is it not, is it something we should be doing, does it work, does it not work? I think housing first is very well intentioned. I think that getting people off the street absolutely should be a priority, but I think it needs to be housing first and very quickly mental health treatment, wraparound services. That should be included, because otherwise you are not dealing with the root cause of the problem. And the root cause for the individual is oftentimes mental health, substance abuse. The experts will say that's around 90%. The root cause economically is obviously the lack of affordable housing. And I think when you look at cities like DC, San Francisco, New York, others, you see the urban centers are just not what they were. And I think that all of this is sort of proliferating, unfortunately, in the problem with America's cities. And it has to be addressed.
Megan, do you want to comment?
Yeah, I guess I'll just say, I could not agree more that homelessness is really a problem of a lack of affordable housing at the end of the day, right? We have just, especially over the last, number of years, we've really just seen more and more articles, and I'll also just say, we hear, especially from Ohio, a real challenge with rural homelessness as well, right? I think, we see more folks who are experiencing homelessness on a daily basis in cities when we're out walking around, but in places, in rural, I remember there was a New York Times piece maybe a year ago or so about rural southeastern Ohio, where people were doubled up. They were moving from hotel to hotel. Maybe they had to go 2 hours to find the next place that they could get shelter for their family. And more we're seeing, seeing people who are living in their cars because they work full time, but, or they're on disability, right? And they can't, or they're elderly, but they just have nowhere to go that is affordable to them. And So really, I think it is just this challenge of the lack of affordable housing supply, and I think that's something that we just absolutely have to tackle. And you know, as we see rents going up and up and up, home prices going up and up and up, you know, it's sad and unfortunate that we see more and more people who are trying to scrape together the money but just cannot on a monthly basis. And so it's absolutely a challenge that we have to tackle.
Yeah, and obviously Ohio has just been devastated, like a lot of states, by the opioid crisis.
Yep.
So I mean, it's really an unfortunate perfect storm that is causing this, and you know, we have to address it from all sides, I think.
Agree. Okay, questions from the audience? If you could just
Great.
introduce yourself too, because we really can't see you up there.
Sorry, I know I was on a panel earlier today that addressed housing affordability and insurance, and I was really pleased that both your respective committees this fall have had hearings that have dug into that, though I'd love to see more focus on the multifamily side of the equation. The Senate Banking Committee did have a LIHTC witness, but your committee, Dana, didn't, unfortunately. But I'd love to know.
We did, though, recently. We had the National Apartment Association. I used to work in multifamily. I worked for a multifamily lender, and I did mainly affordable housing. So we actually had 2 witnesses yesterday that spoke on multifamily housing. One from the National Apartment Association. She was awesome. She's living it in the real world every day. She's a property owner, and she's also a developer. And then we had another witness who talked about state and local regulatory barriers like zoning, land use policy. So we have been, you cannot ignore the multifamily side. I totally agree with you.
Sure. No,
Just
and
wanted to correct that question.
I appreciate that. I was thinking of the hearing from a couple of weeks ago that was specifically on insurance. Yesterday's hearing was very interesting, by the way. My question really is, there's been a lot of attention on single-family housing affordability, insurance issues in your respective committees, and I'm curious if there'll be more attention specifically on the market failures on the multifamily affordable side, and what types of solutions are your respective committees considering in that particular niche, notwithstanding the home ownership side and fixing fair plans and the data issues and the litigation funding and all of that fun stuff too, but I'd really love to kind of take a deeper dive into the multifamily portion of it if you guys are focused on that.
Yeah, no, absolutely. I mean, as you said, we had Michelle Norris come and talk at our hearing, but I will just say, digging into the insurance market issue, the incredible just challenges in the insurance market across multifamily and single family, but you know, specifically multifamily that you mentioned, it is a little bit mind-bending, and I think, as I know you know, because you are deep in the weeds on this, you know, there are multiple different causes that folks have attributed to the sudden increase in costs, especially in the multifamily industry. But I think, particularly for the multifamily affordable industry, it is a real challenge that we are still, I think, trying to get our heads around somewhat, and also trying to respect some of the barriers that do exist between what we're able to do at the federal level and what we're not. But I do think one thing that did come out of that hearing that there was at least some consensus around, I think, from all sides, and also from the many folks we talked to in the background for that hearing, was just the need for increased mitigation and funding for mitigation, really, and tools for mitigation. And that may not speak to all of the issues that have been raised in the affordable housing space. I know that there are some other pieces to that as well that have come up, particular to affordable. But when it comes to things like the increase in climate-related risk that folks have cited with respect to the global reinsurance market issues, I think mitigation is one area where we've just heard, you know, from all levels of the insurance industry and housing industry, support. But we also know that that's something that is not free, right? And also that can be at a property level and can also be at a community level. And so I think we have to think about both of those pieces to it, to the extent that there are pieces that are the reinsurance and actual brokers that are driving some of these cost increases.
I mean, I will say the insurance issue on top of everything else, right? To me, it was always, whenever a multifamily deal came together, it was almost a miracle, right? Because so much can go wrong. And we talk about supply, but do we actually look at why these deals aren't coming together? Well, I worked on a team that had 70% of its pipeline disappear overnight because of rates. And then 80%, and then it almost went down to nothing. It almost went down to we were only doing the business of the properties that we had to refinance because the loans were rolling off. And the reality is that rates, it just can't be emphasized enough, higher interest rates have made a lot of these deals unfeasible. And they were already hard to pull off. It's a very, very difficult thing. Higher insurance costs, it's just yet another factor. It's another cost that's going into it. Lack of labor availability. Has anyone tried to hire an electrician recently for a large-scale commercial project? It's hard. It takes months. The cost of delay in building these properties, it's already been bad because you already have to go through the permitting and zoning process. That's about 2 to 3 months in most jurisdictions. You have to wait if you're working with a governmental entity. You have to wait if it's HUD. It's going to be months. If it's Fannie and Freddie, probably 1 or 2. You getting all of the financing together, taking the deal to market, taking it to the secondary market, securitizing it, everything that goes into it, it's almost impossible to accomplish. But it's become so expensive that something has got to give. And I think it is really the interest rates that are the main driver. We can look at insurance costs, but until rates stabilize, and hopefully we are headed in that direction, until rates stabilize, though, I don't think these deals can get done, no matter how many demand-side policies you throw at it. Right now, it is about getting them through the supply bottlenecks.
Okay.
Over here?
We're-
Over here.
All right, because we can't see who's, okay, way over here, all right.
Hi, my name is Dana Lee. I work for the Department of Health and Human Services Office of Refugee Resettlement. As you all have probably seen or heard, we are bringing in 125,000 refugees is what the president has set for this fiscal year we're currently in. My office also works with Cubans and Haitians. We work with asylees. We work with Afghan and Ukrainian humanitarian parolees. So that population of newcomers we work with is even larger than the refugees expected. And when these newcomers come to our country, they're competing for the same low housing stock that other Americans are competing for, but have even more challenges and barriers in some cases to access that housing because of no credit scores, inability to do background checks, language issues. And so when we place folks in these urban centers with low housing stock, there's just so much competition. It would be great if we could start placing folks in cities that are smaller cities that, and we do placement there, but focus on cities that are smaller, that are losing populations, and work to revitalize those communities. And not only revitalize it through housing stock, but you have to have the services, you have to have the jobs, the public transportation, in order for that to happen. Are your committees having any conversations around revitalization of small towns, medium-sized cities, in ways that we can encourage populations to go back into those cities instead of fleeing from them?
Yeah. So I guess I would say generally on the subject of kind of community revitalization broadly, right? And this is something that we've seen in communities in Ohio and communities throughout the Midwest, and certainly, I think some communities throughout the South as well, in New England. We've seen, population declines over not, years, but decades, right? And there has been a lot of work, and I think some of the legislation that we've touched on already, things like the Neighborhood Homes Investment Act, I think kind of speak to some of that desire to refurbish the housing stock, but also investments in. I know an earlier panel mentioned improvements to the home program as well. And also as we look at, there's a legislative proposal in the Senate around improvements to the home program to make some of those kind of long-standing necessary fixes, but also, as we think about community development more broadly, I know there are also a couple of proposals with respect to investments in rural, USDA-defined rural communities as well, and to do some of that small town revitalization, both from a commercial perspective, right, because you have to have both the commercial economic development and the housing economic development. So it is something that we're definitely talking about and certainly considering, because we want to, we see it every day in the state, certainly, but also, from the members on our committee and all of the members across Congress who come to us with these proposals. It's really an acute challenge. And when I talked earlier about, just the different types of challenges, right? That's not a San Francisco or DC or, or Memphis challenge, but it is a challenge for so many communities throughout the country. So absolutely, those community development programs are vital.
Right, and I will say, just from the perspective of areas that are more rural, more suburban, where land is more abundant, it's obviously easier to build housing and more affordable. So it's very, very important to get innovations into those areas, like innovations in manufactured housing, like the ability to build homes cheaper, quicker. It at least takes care of the obstacle of high land value, which is one of the hardest things about making housing more affordable.
Question right here?
Hey, my name is Jordan Harris. I'm a policy associate for Compass Working Capital. My question is, how do you think student loan debt affects young people and their ability to buy a house today? Or are there any solutions to help young people buy a house too?
It's one of my favorite subjects.
I know.
I can remember
I mean,
bringing this up when I was at the Urban Land Institute a very long time ago, 14 years ago, and people say, no, that's not an issue. But I was hearing about it from my daughters who were in college, their friends that were borrowing huge amounts of money. And then very recently, it's almost a year, my youngest daughter just got married, and she's married to a wonderful man. But he went to George Washington University Law School and has a lot of debt. So we got to see it firsthand that yes, student loan debt does impact it, but thankfully, combined, they were able to build a beautiful new home, but it definitely has an impact. So I'd love to know how you're thinking about it on Capitol Hill.
It definitely has a real impact. And, we've seen some increasing standardization in the way that things like income-based repayment plans and things like that are treated since, they used to be all over the map. I think there's a little more consistency in the loan programs about the way those things are treated now, but it really is, student loan debt is, one of the largest sources of debt that people bring into, into the home buying process before they bring the home into the picture, and then that, obviously increases the situation. And it, not just from an underwriting perspective, right, and just making it challenging to actually qualify, but also from, their own financial security and mental health perspective of being able to take out those loans. So it's absolutely something that we think about and worry about, and along with some of the challenges that Dana mentioned earlier, right, that we're all seeing and experiencing in the market in terms of, rising prices and also, the interest rate environment, the shortage in stock. Student loan debt, I think, just kind of adds to the calculation, making it more challenging for younger people, or not just younger people, right? There are plenty of parents out there who have co-signed on loans and now have this debt that also goes with them. So it's really not just a young people issue, and it is affecting communities across the country, particularly people who don't come from families with wealth, right? And it is certainly a problem in communities of color who may not have that generational wealth that could pay to put them through college, but also in many, many low-income communities and families across the country. So it's a huge concern.
Yeah, for sure. And I just read a statistic. I know there are a lot of questions, so I don't have much to say on this, but I just read a statistic that 1 out of 3 individuals age 18 to 35 are living with their parents. So it's almost like we have a lost generation out there of folks who are not able to start their lives, which means a lot of things. They're not building equity, number one. They're not building net worth. They're also not as much at a rapid clip contributing to economic growth. So there are a lot of implications in that. I will say, as an aside, I think we also need to look at why universities are so darn expensive. But it's an excellent question.
Great. Okay. David.
Sure, thanks. Great panel, thank you so much. One of the you mentioned the Homeowner Assistance Fund, very proud to be involved in that. It was a great short-term fix. It had a great impact. But I think one of the longer-term changes from the pandemic that lasts is going to be the deferrals as a policy, where we said, okay, in our forbearance of people who are in trouble, we're going to take the payments that you've made or that you haven't been able to make, and we're going to put them on the end of your loan payment because we know you can now catch up, and then you'll just pay your loan longer or pay that back when you sell your house. And it's such an obvious idea that I think FHFA has now made it a standard part of GSE underwriting, and that's a huge success. And yet, as Megan and I were talking about earlier, we have thousands of veterans who thought they were doing that and are now facing foreclosure. And it's both tragic and really shameful and unnecessary. And so I don't understand how this happens. We were talking a little bit, but could you give us a little sense about what we're going to do about that? How, I know there's a moratorium, I think, that the VA had announced while they figure this out, but I am confused about what they have to figure out and what we can do to help.
Yeah, no, absolutely. So this is an issue that my boss, along with Senator Tester, who's the chairman of the Veterans Affairs Committee in the Senate, as well as Senator Reed, the chairman of the Senate Armed Services Committee, and Senator Kane, wrote to the VA on a couple of weeks ago, as we just have started to see more and more veterans facing foreclosure. And it's an issue of huge concern to my boss to make sure that the veterans have an option to be able to stay in their home, particularly if they're able to continue their payments, right? And it's a real challenge that we're facing. So as you said, David, after the letter, the VA did announce that they're requesting that servicers, they're strongly urging servicers to suspend foreclosures at every stage of the process as they work to roll out. They're working on a program that will be a new loss mitigation program from VA, but I think is still a little bit off in the pipeline. They've also announced that they will be, although I don't think the formal announcement has come out yet, that they'll be extending one other modification program that they have that has a bit of a partial claim piece to it. But certainly we're also talking to the VA about other options there to make sure, as you mentioned, the deferral and partial claim programs have been a huge help in the FHA and in the GSE portfolios, and for those borrowers, that has been a program that's had a huge benefit, and I think really helped a lot of FHA borrowers just stay in their homes and not have to go through a more extensive loss mitigation process that ultimately I think also saves the mortgage insurance fund money. So it's just helpful overall.
Yeah. I know that when we rolled out our loss mitigation programs following disasters, following COVID, we tried to do everything we could to make sure that USDA, VA, and FHA were aligned. And I hope that's what's happening now. My guess is, and I do need to look into this issue more because what you just said was really, really startling. My guess is that VA may not have all of the authorities just because of the structure of the program, and it may be something where you need statutory authority, I don't know. But regardless, there should be uniform procedures, and the service members certainly should not be disadvantaged because of something that seems to be more like a structural flaw.
Good question, David. We have time for a couple more questions.
Hi, Mary Griffin with Cooperative Development Foundation. I talked about shared equity housing before, but I just want to bring up, as you're talking about student loan debt and young people not being able to, there seems to be a growing crisis on the other side where seniors are paying more and more for their care, which I think might end up eroding a lot more of their home ownership. And before we sort of get to even more crisis, it seems like that's something that maybe there's a lot of interconnectedness that we need to start talking about in that way, like the housing with the care and how much are we paying and how can people continue to support that. So I don't know if that's being discussed, but there seems to be sort of something looming in the future on that.
Yeah, and I would say that crisis is already unfolding. I mean, we have already seen waves of retirement. I'm sure you read the same articles I do about folks who are working Americans who are retired who cannot afford to live. And anyone, I'm sorry, plug for the movie Nomadland. That was just very eye-opening if you haven't watched it. The crisis is already here, I think, when it comes to older Americans. And I think, they're living longer, which is a great thing, but it also means they're exhausting their savings in some cases. The more we can do to build in some of the supportive services, wrap around things where you can get a lot of community benefit if you have, say, a nurse's station in a multifamily development or whatnot. The more of those innovative ideas that we can capitalize on, the better, and I think they're needed today, and certainly, in the next decade or two.
Yeah. And I'll just say briefly, the Banking and Housing Committee had a hearing, I want to say last year, but I have no sense of time anymore, on the incredible housing needs facing an aging population. And part of those housing needs is services and care, right? And some of that can be directly related to just activities of daily living. Some of that could just be healthcare costs that are going up and up. But either way, it definitely puts home ownership at makes home ownership more precarious for folks. And also, a lot of the housing stock that we have is not adequately suited to people who are aging. It's not adapted for people who are aging or who have a disability at any age. And that remains a huge concern, because the less stock we have that meets those needs, the more people who need to go to higher levels of care maybe before they even need it. And so that's another issue that the committee's been talking about, is just what do we need to make sure we're doing and what should we be doing to help people stay in their homes, especially if that's a more affordable solution for them and for their care and for their mental health for as long as they can.
Do we have time for one more question?
Shan Kemper, I'm with Community Solutions. We're an organization that works to end homelessness. And in the last few months, we've had grassroots activists, legislators, stakeholders ask us about manufactured homes as one solution to homelessness and moving into affordable housing. I have my own concerns about that. I think it's potentially exciting, but I wanted to know, do you see this as a topic and a potential issue that will be coming up in the near future? And if so, how are those conversations being guided?
Well, I think, at least in our committee, number one, we've seen a lot of interest in manufactured housing. A lot of that, though, is because we have members with constituencies that live in more rural and suburban areas. Now, as a solution to homelessness, and by the way, we will, as part of the agenda next year, at least we're planning to look into the topic of homelessness, I think it is a discussion that has to happen. How do you house people more cheaply? I've read a lot of different case studies, but I don't know if the data is definitive yet on whether this works. I'd like to hear from folks like you, like whether this works, whether it doesn't work. I think it's certainly something that at a staff level we have to educate ourselves on. But I would, and I again, a lot of these solutions vary by area. What works in an urban core may not work, in an exurb of a city, for example, where there are homelessness problems too.
Yeah, and I guess I'll just say I would share Dana's sentiment that there's been a lot of interest in manufactured housing and in other housing and building technologies generally, right? Modular and other things that can make production faster and hopefully more affordable and help us address some of the supply issues that we've been talking about all day. I will say, we've talked about manufactured housing as kind of a broad housing solution, so not specifically focused on people experiencing homelessness, but as something that's kind of broadly just a home ownership solution, honestly. I think certainly it's an affordable option that can be considered for a wide variety of folks, but certainly I think Ohio is a state that certainly has a lot of manufactured housing just throughout certain parts of the state, and so it is definitely a housing option that we do a lot of thinking about and will continue to do a lot of work on.
Well, Megan and Dana, this has been a really wonderful conversation. Thank you for sharing your time with us and your knowledge and expertise. And thank you to the audience for participating as well.
Thank you. Thank you, Madam Secretary.
I
Thank
will
you.
come see you on the Hill. Okay. I have one more job up here. Oops. Thank you, Megan.
Thank you so much.
Okay, we have one more one more session, and I don't think we're going to have a break between this session and the next session. Go ahead. I just wanted to wait. David. All right. Okay, we're going to get started with our final session of the day. This is going to be an exciting session. We're going to be focused on the Black Homeownership Collaborative. The Black Homeownership Collaborative was launched in 2021. The collaborative is led by a steering committee that includes leadership from the NAACP, the mortgage bankers, the National Association of Realtors, the National Association of Real Estate Brokers, the National Fair Housing Alliance, the National Housing Conference, and the National Urban League, with research support by the Urban Institute. The 3x30 initiative is a 7-point plan led by the Black Homeownership Collaborative to achieve 3 million net new Black American homeowners by the year 2030. The 7 points are focused on tangible, actionable, and scalable strategies to not only bring in new homeowners, but sustain existing homeowners. It's my pleasure to introduce a rising star at NHC that is helping the Black Homeownership Collaborative achieve this incredible goal. Erica Ramirez is a senior policy associate at the National Housing Conference. Previously, Erica served as a research assistant conducting a policy and case study evaluation of transportation and racial inequities in the Baltimore and DC metro areas. Erica holds a bachelor's degree in political science from Michigan State University, a rival of Dave Dorkin. And so it's my pleasure to welcome Erica Ramirez to the stage. Please join me.
Hello, everyone. Good to see you. I'm going to move this out of the way. I'm too short for that. But give me a moment while I load up. Oh, look, we're already loaded up. If you'd like to follow along, I'll be navigating our 3x30 website. That's number 3x30.org. You can find this tool, the mortgage calculator, under our tools and resources page. And thank you for the introduction, Pam. Some context into 3x30 itself. It's a resource pulled together by the Black Homeownership Collaborative Steering Committee and members who really put this together to serve as a virtual trusted advisor to Black homeowners and consumers. This is consumer facing, and as you navigate the website, I'm actually gonna go to our Homeownership 101 page, if it'll load, maybe not. But when a consumer goes onto 3x30.org, they'll be taken through steps of the homeownership process that's really kind of condensed in a way that can be consumed by the individuals looking to get educated about the homeownership process, and including the things that they'll need along the way, like credit scores and just understanding what that means as they navigate this process. And so we launched this version of the mortgage calculator during the 2nd year anniversary of the Black Homeownership Collaborative, which was held in Memphis of June this year. And so just to, as I navigate, what you'll see here on the left-hand side is the About You section. And what's different from other mortgage calculators here is really looking at the individual and meeting their needs. And so rather than going to what you'll normally see with calculators is a 20% down payment, and this is what the home price will look like, and so on. This takes the individual's gross annual income as well as their monthly debts, amounts saved for a down payment, so looking at their savings, and then any additional down payment assistance, for example, or any gifts or grants. And we also have a link that sources out to down payment resource, so individuals can kind of get to know what products they may be eligible for. The difference with this, what I really want to focus on, is the amount saved for a down payment. So what you'll see on the right-hand side is sort of the information that populates based on the About You section. And so pointing to the monthly payment, for example, what you'll see listed underneath is also the inclusion of what an estimated PMI that will go into that monthly payment, as well as property taxes and homeowners insurance. And so when we're looking at the amount saved, and the default here is $30,000, that default is actually, or that input of the savings is broken down between the down payment and the closing costs to really put that in front of the consumer, and to understand where that $30,000 is going, rather than assuming that that $30,000 is only for the down payment itself. It's about bringing understanding about the closing costs. And so you'll see that that $30,000 is broken down between those two. And also to point, the input, what the consumer puts in, you also see that it's not assuming a 20%, nor is it assuming a 3%, but it's showing what they are able to put down based on their incomes and their debts. And you'll also see at the bottom of the right-hand side is the housing debt to income ratio as well. So let's say a consumer is working off a fair credit score, and you'll see the ranges here. They'll be met by a message that says, let's work together to ensure you get approved for a mortgage loan. And there's actually a link to connect with HUD-approved agents near them. And this is actually already a part of the 3x30 website. We have 11 markets that lists state by state HUD-approved agents, that a consumer doesn't have to go out to Google who their local agent may be. It's right here in one resource. And so, you know, the messaging, ultimate messaging is we really do want to create more positivity around the homeownership process and allow people to know that there is support for them. They're not alone, and there also are resources to sort of help them understand and navigate this process. And so, you know, I focus on those two pieces, but also adding the mortgage information itself. The default is at a 7% interest rate just to reflect the current market, but of course you can also just adjust based on you know, what the current interest may be. Also default is 30-year loan term, and pointing to the estimated annual property tax. You'll see some info on that. This is an estimate based on the national median, but of course when you're looking at the local level this will change. But this allows to really give the consumer an estimate and really see what they're working with and what opportunities they have, as well as connecting them with the people on the ground who are ready to serve them. And so that's just a walkthrough of the mortgage calculator. I appreciate, you know, everyone being here today and being a part of this conference. And I see a lot of familiar faces that I've worked with and that have contributed to this work as well. So I want to thank you all for that. And yeah, thank you so much. I appreciate it. Oh, we go. Sure.
So I will use this. What Erica didn't say is that she developed this calculator. So thank you. That was awesome. And I just want to show you the coolest thing about it is that as you slide the amount, say the gross annual income, you can see that the numbers automatically change. And so as you make different adjustments, and you can see what is your down payment going to be. You can see that if you move your amount of savings, the down payment goes up and down automatically. And so that means that I can say, well, if I have $25,000 saved, my down payment's going to be 4.67%. I don't have to guess whether it's going to be 5 or 10 or 20. It's 4.67, fully taken into account my closing costs. But if I have at 20,000, you can see here, my down payment is less than 3%. And that means that I may need to look at that and find if I can get more down payment assistance support. Maybe an FHA mortgage is going to help me. We're building that in. And as I go up with this, it changes that, and it also changes my DTI. So just an amazing tool that I think, we're going to be really excited as we promote it. But I also want to say that this is open code. So if you're interested in putting this together for your website, if you want something that looks like this, if you're working with Asian American, Pacific Islander populations, you want to translate it into Korean or Chinese or Vietnamese. If you're looking at Latino populations and you say, yeah, I want this, but it needs to be in Spanish and English, we want to work with you because this is not trademarked or copyrighted. This is about getting the information out there. We want it to be accessible and usable for you, so don't be shy, and let us know how we can work together on that. I want to thank everybody for being here. I want to thank those of you who are online and came today. I do want to correct one thing before I go to thanking our sponsors, which is this morning I said that registered nurses, that in 90 out of 390 MSAs, they could not afford to buy a home. Unfortunately, I transposed those. Only in 90 out of 390 can they afford to buy a home. If you're a teacher of middle school students and we look at your salary for your MSA, only in 122 of 390 MSAs can you even afford to buy a home. And so it's really so shocking that it's even hard for me to keep my head around it, and it's worse than it's ever been. The income needed, according to our Paycheck to Paycheck database, I'll put in another plug for that. You should definitely check that out on our nhc.org website. But the income needed to purchase a median-priced home has gone from $67,000 a year in 2019 to $126,000 a year now. And it's just impossible. Nobody got that kind of a raise. Nobody has seen that kind of, I mean, maybe some of us did, but I'm looking at you. But it's, nobody gets that kind of a raise. Nobody has seen that kind of an increase in income. It's just more people who have been taken out of the home buying process. And housing is a continuum. This is the most important thing we have to always focus on, is that we do have these numbers for rent, and we have them for studio apartments, 1-bedroom, 2-bedroom, 3-bedroom, 4-bedroom, the full spectrum you can see in the Paycheck to Paycheck database. But the fewer homeowners we have because of rising housing prices, that means the more renters we have. And since we're not building enough rental units, that means that rents continue to go higher. And at the bottom of that graph are the people who are pushed out completely. And those are the people who cannot afford to even begin to stay in their home and end up becoming economically homeless. And so there are a lot of people who become homeless because of mental illness. But there are enormously more people today than ever before who are finding themselves because of economic homelessness. And that's just completely unacceptable. And one of the most shocking things that I've learned when we talk about homelessness is that we're getting over 100,000 people, sometimes as many as 200,000 people, out of homelessness every year. And yet the number of people experiencing homelessness stays the same or gets higher. And the reason for that is because we're not building enough affordable housing. You know, at $150,000 a year, we could solve our homeless problem in just a few years if we were able to, and then focus on the hardest group, which are those who are severely mentally ill and have severe health issues, and really focus on that group. But we could have a dramatically different homeless situation in this country if we just built more affordable housing, and we're not. And so that's where we come in. We have to fight and ensure that happens. I want to thank all of our sponsors. Wells Fargo, our premier sponsor, thank you all for everything you've been doing for us for so many years. Bank of America, JP Morgan Chase, TD Bank, Rocket Mortgage, Living Cities, the Council of Federal Home Loan Banks, Freddie Mac, the Mortgage Bankers Association, the National Association of Realtors, NeighborWorks America, Pretium, Zillow, and Habitat for Humanity. Your support of everything that we do is so important to us, and we are very, very grateful. I also want to thank the NHC team for all of their hard work. Who's by the door there? Can you tell the NHC team to come in if they're not already in the room? Because they're amazing. This is an amazing group, I have to say. And I don't want them to just hear secondhand how awesome they are. But I'll start with Amanda Mitchell. I would not be able to function. She's our chief operating officer, and she manages everything that we do in NHC, all of our contracts, all of anything that goes on a spreadsheet, and most importantly, me. So thank you. Charles Lowry, our senior policy director, who's over here. Thank you, Charles. Cara Bigay, who did so much work on this conference. It's incredible, and I don't know who is more appreciative, me or Brittany, who used to do so much more and has now been able to really sink her teeth into so much policy work, who is here, Brittany Webb. You've seen her. Erica Ramirez, who you now know. Whitney Sarkody, Demetria Brown. Thank you, Whitney, in the back by the panel. Lindsay Bolin, who's not here. She's in Nebraska, but amazing and really helps us keep all the clocks running on time. And Owen Posnett, who's here and who's just incredible and has been so valuable for us as our research assistant. So thank you all. At this point, I want to invite you all to go next door to the Holman Lounge for our networking reception, sponsored by Living Cities, and everybody in Washington loves an open bar. So help yourself, and we'll see you soon.